Welcome, Delian.
Thanks for having me.
Yeah. Could you give our audience a quick background on what you do at Founders Fund and a quick, maybe 10-second background?
Sure, yeah. Early stage partner in Founders Fund, primarily invest in seed, Series A, and what I call more engineering-based investments, so things that typically intersect with the world of like hardware plus software, or like highly sort of regulated. So that's the way I like to invest. And then I'm also a co-founder of Varda Space Industries that I started about 3 years ago.
And your background's actually quite unique. You were a founder, turned investor, going back to founder. And that's, that happens rarely, right? No one wants to continue chewing glass, but you decide to do that. What made you decide that, you want to become a founder again?
Honestly, it's a perverse addiction to, probably pain at the end of the day is probably what brought me back. But in particular, I had this idea that I was passionate about around in-space manufacturing that, I really wanted to see come to life, and the vision that I had around it, I just didn't see anybody quite working on it the right way. Like building a company is such a painful choice. I would have much preferred to make it as an investment and seriously pursued it originally as an investment thesis, met with a ton of founders that were working in the space, but just didn't feel like I, had found the right team, anybody that was investable. And so ultimately decided the only way I could do it was, starting it myself. But sometimes I say that, from the PTSD that I had from my first company and the failure of it, I felt like when I was proactively choosing to actually start Varda, I felt like I was literally like putting my mouth around a double-barreled shotgun and like pulling the trigger and like knowing what comes on the other side of that and still choosing to do so. So, it's been definitely a painful experience, but, worth it given the, problem set that we're working on.
So I remember listening to one of your podcasts, and you mentioned that you thought about it maybe 2 or 3 times. And the third time was when Keith Roboy took you up some mountain or you're hiking, and then you kind of said, all right, I'm going to do it now. So how important do you think timing plays into starting a startup? Because a lot of founders they have this idea and it's always like an urge. So how do you think about that, and what would you tell them?
Yeah, I think if you look in like the, sort of history of technology, there's been a lot of times where the right idea was started, but like the totally, wrong time. In some ways, even Varda is a perfect example of this. There were in-space manufacturing companies that were started in the 90s, the 2000s, the 2010s, and ultimately, obviously, all of those were just the wrong, sort of starting point. And so I think a lot of, being a founder is making sure that both, obviously, you have a right idea that you are the right founder for, that you're the, sort of, person that is built to be world-class at, solving and creating this particular vision. But that you're also starting it, at the right time. Yeah. And there are certain ideas that I think are more timeless. There are certain ideas that I think, sort of less so. In particular with Varda, there was a set of, let's say, like technical cost curves that, needed to be at a certain point in order to start it, right? And I think there's a lot of things in the world that you can actually predict, pretty accurately. If you look at everything from, cost of launched orbit, let's say battery energy density, cost of solar power. These are things that basically almost perfectly follow mathematical curves. And so you can project out where they will be in the future. And typically with a business model, you can typically project what will make your business model work versus not. And so you just have to, in some ways, bide your time. And so while I had thought about the idea many times, all the prior ones I sort of had discounted because it felt like it was too early. But finally in that, last time where it really resurfaced again with that conversation with Keith, that was that moment where I was like, man, I no longer have like, before I was like, wrong time. These founders aren't perfect. Maybe I'll invest in the future. And then it just hit me like a ton of bricks where I was like, man, the people that are working on it aren't correct, but now the time is really right. And I really don't want to be sitting here 3 years from today and still have nobody, in a world-class way pursuing this vision.
That's true for space, right? But what about for the average founder that wants to build? How do you think about market timing? Like, what signal should they be looking for?
Yeah, I'd still argue that, even in the world of like, sort of pure, or software enabled, let's say, startups, there's still clear, moments of timing. Let's take like Uber as a perfect example, right? Having everybody in their pocket have a device that can communicate to the internet and has GPS clearly just fundamentally changes the way that you think about, transportation in a city and being able to actually, call a car, right? And so I think, there was a, moment in time there that was very appropriate for, sort of a business, like that. And you could argue that the, sort of mobile, let's say revolution caused a whole set of startups, AWS coming online, making it so you no longer had to, build data centers, enabled that. Blockchain technology obviously enabled a, sort of set of companies and that type of decentralization. Obviously AI and GPT today, maybe more enabling incumbents more so than, upstarts. But, I think in some ways, a part of the job of being a founder is like, you may have a particular passion area, but look for that spark where it's just so much easier to build a company when you're like truly riding a wave versus fighting against headwinds.
The second point you made on this podcast was finding your co-founders. it's in fact very hard to find co-founders. Especially within crypto, as an example, I'll give you. There's a bunch of hackathons that happen where co-founders date each other and they try to like set up time to kind of build with each other. And it turns out, more or less it doesn't work out or may work out. It just depends on the right attributions. So how do you think about finding the right co-founder? What did you do in your analysis to find the right co-founder?
Yeah, even though we've had some success, in the Founders Fund portfolio with some of these, founder dating programs, like some of our, top companies, take Traba most recently as an example. They actually met through an on-deck, fellowship where they explicitly were both in this mode of, they try and attract people that are sort of proto-founders, right?
Yeah.
Maybe haven't quite settled on an idea or a co-founder, and they do basically like rapid founder dating. I tend to subscribe to a slightly different philosophy, and maybe it comes down to, and I would argue there are areas in crypto that come down to this as well, especially if you're taking on a problem that is deeply, deeply technical. That I think you can actually analyze a problem and take what I call, and borrow this from Keith, the sort of Hollywood style approach to sort of building a company, right? Where in Hollywood, it's not like they sort of go out and A/B test with the audience 4 different versions of the film with different sort of lead characters. They have a casting director that looks at the script and determines, okay, for this particular action film, we should do Tom Cruise because he's gonna take a motorcycle and jump off a cliff. And you definitely want Tom Cruise in the motorcycle, not Tom Hanks. And it's very important to have the right person. And so when I looked at it in some ways, the script of Varda, there was a very obvious set of like necessary skill sets and clear characters that I think would sort of play that best. And so when I was going out and looking for co-founders, I basically had an explicit list of almost like 30 attributes of what I was looking for in a co-founder. And when you narrowed it down, the number of people that actually like matched those attributes, there was like 3 in the world. So it wasn't this like broad dating, let me go to a hackathon and I'll happen to stumble into somebody. It was very like sniper's approach for every single role that we needed to fill. If we're called the first like 10, 15 people at Varda, even beyond just the co-founders, it was very obvious, like, here are the key core risks. Now, obviously, in some ways, the more ambitious technically a project that you take on that requires these diverse skill sets, the easier it is to, in some ways, take that sniper's approach. If you're doing something that's a more like standard, whatever front-end software technology company, obviously there's a much wider set of people that might be able to, basically help you burn down those initial core risks. And so in some ways in aerospace, it's at least a little easier because there's just such specific and broad sets of technical problems and very narrow talent pools that you can pull from.
Okay, so timing, market timing. We talked about finding your co-founder. How do you manage the tough conversation around equity splits?
I've only gone through this twice really intimately, with my first company and with my second company. So it's hard to say that I've like a, strong framework. And in some ways, I do think it is truly, sort of case by case basis. I think what you need to optimize for are basically like 2 things. 1, you need to find a deal that everybody's happy with basically in the moment.
Yeah.
And 2, that deal also needs to be ideally the thing that people are also going to be happy with 3-4 years, basically, sort of down the line. And I think at the end of the day, what you're trying to assess is, who is the most, sort of, critical, at the company. How do we plan on decisions to be made in the future? And is it going to be, sort of fully equal? Is it going to be one person that ultimately, the decision, falls down to? And, how are we expecting this, sort of company to, function on a go-forward basis in terms of, equity that we're going to be giving to early employees, and how should, sort of the founders be related to that, right? Are we starting off with a massive option pool or a, sort of smaller option pool? I think in some ways, all of those negotiations come into one. I think at, Varda, I think it was in some ways easier in that it was obviously not going to be a purely equal equity split, and that I was a chairman president that was not going to be nearly as full-time on the company relative to my, co-founder that absolutely needed to be the, sort of CEO, co-founder, have a larger, equity stake, because he was also going to be recruiting a lot of the core, sort of team, much more so, than I was. And so in some ways there, the answer felt obvious. I would say I find that it's typically intellectually lazy to just purely default to like an even, equity split. I think there are rare instances where that makes sense. Maybe Airbnb is a perfect example where you have 3 co-founders. I'm actually not 100% sure, but I would guess that their equity split was even. And you still have basically all 3 founders still involved in the company, like, almost 16 years later or whatever it is. That I think is like very rare. So I think, you should do a decent job of actually determining what should the true power structure be. I think most people get lazy and just do it even, but realistically, that is not likely. It is not likely that the power structure is going to be, truly even between the co-founders.
What were some of the biggest lessons you've learned as a founder over the past 3 years? Obviously, you founded your first startup, and then you went back to starting a startup again. And I feel like some is generalized, some may have changed. So I'm curious on your perspective of some of the biggest lessons you've learned.
Yeah. The first is definitely around, talent in that with my first company, and a part of it was maybe I was 19, MIT dropout. It's not like I had an infinite ability to, recruit super top tier talent. Although credit to some young founders in our portfolio that I've seen, even at a very young age with limited traction, be able to attract top tier talent. But I at least was not able to. But now when I think about basically like a problem that I'm trying to solve, my first inclination and instinct is basically like, who is the person in the world that is going to be best basically at solving this problem? And how do we get them either as an advisor to the company or ideally, obviously, sort of a full-time employee. And so taking that sort of talent, focused lens to every, aspect of the, sort of company, building process, I think is basically one of the biggest lessons learned. The second probably is just, the willingness to do extreme levels of focus. I think with my first company, it was too easy to focus on what felt urgent but was not necessarily important. Versus I think at Varda, I've done a much better job of recognizing what is the most important problem, and it might not be a problem that the company is immediately facing today, but if a gap is not filled, it will be a very pressing problem. Basically, a year or 2 years from now. So one example that I like to give that I think was my most extreme, basically, times of focus over the past couple of years was in the summer of 2022. I recognized that we were basically starting to get some really great early traction with pharmaceutical, clients at Varda, but we lacked a sort of, executive, business development leader that had closed these types of contracts before. We just didn't have that DNA within the team. While I think as a founder, you should be doing a lot of founder-led sales, ultimately, I knew that I needed somebody that could speak the same language, basically at the clients at a very high level, given the size of contracts we were, negotiating. And so ultimately what I decided to do was, basically buy a one-way ticket to LA, stick myself inside of a conference room and literally only allow myself to work on this, which sometimes can be very painful because you end up deciding to actually proactively, have a lot of free time on your calendar where I could have obviously, taken some Founders Fund pitches. I could have worked on other things at Varda, but you have to proactively be very comfortable with the idea of actually like, no, I'm going to say no to all of those things because that free time and that free space is going to allow me to have more time to ideate, okay, how can I, fill this role even better? Who are the people that I can talk to, network with? What is the information that I need to learn such that I'm able to interview these people well? I remember like the third or fourth interview that I did, I fucked up like a very basic concept that you need to know in the pharmaceutical industry. And I spent the next week just like drilling myself, reading textbooks, like reading S1s, making sure that like the next time around, I wouldn't seem so unsophisticated a candidate. Because obviously, top tier candidate's not going to want to work with a co-founder that like, is totally missing, sort of basic concepts, within the field. And then maybe the last lesson is just that, product market fit is truly forged, not discovered, right? I think with my first company, we just kind of like threw a ton of, sort of shit at the wall and basically like looked at what stuck and then tried to lean into there. I think at Varda, we've been much more proactive about taking a very informed perspective, in the market. And I'm not saying that we were perfectly right at like, let's say the seed round when we were first starting the company, but it was much more proactive of assessing like, what is our value proposition to clients? How is it resonating? Where do we see the market basically, sort of trending towards? What are going to be some of the top priorities for both our DoD and commercial clients? And then, forging a value proposition that we knew would strongly resonate with them, not like A/B testing it amongst hundreds of different clients with hundreds of different value propositions. It was a much more sort of intentional forging process that was very, let's say, proactive rather than purely reactive.
There's a couple areas that stood out to me, but one I'll touch on is learning, continuous learning, which you talked actually about under your recent article yesterday. Well, happy birthday, by the way.
Thank you. Belated yesterday.
Belated, sorry. But you posted this article that talked about the 30 lessons you've learned at the age of 30. And I think the first one was like continuous learning. And so I think this is also very true for founders that are building in this space, actually generally, that founders should always be learning. And I see sometimes where founders kind of like stay focused in one area and they kind of forget that, they have to continue learning and staying on top of education and information that's coming in.
Yeah, this struck me twice really strongly, earlier in my career that I think ended up, motivating me. And I'll highlight both these stories because I think they're relevant to, how to make sure that you're continuing to learn. I had this coffee with Sam Altman when I was 22, so call it 8 years ago. It was right before he was about to be president of YC. And he was working on this nuclear company at the time, but had his hand in so many different, pots, and all of them in these highly technical fields. And I remember just thinking, it's I think Sam was maybe 4 or 5 years older than me, so he was 27 or 28 at the time. And I remember just thinking, I was I'm too late. I understand computer science, I understand software, all these interesting fields that Sam is working on. I should have been studying this stuff since I was 12. I only have this computer science degree. How the hell am I going to impact the world in more interesting ways other than just in my opinion, just purely building software was not the way that I wanted to, truly, sort of impact the world. And so I had this deep existential angst and frustration where I was it's just too late. I screwed up. And so I can't claim that I put a ton of effort into it for the next like 3 or 4 years after that, sort of coffee. But then 3 or 4 years later, I found myself at Coastal Ventures and working with, our let's say the CEO of Coastal Ventures, Vinod Khosla, and that man is just truly phenomenal at being tip of the spear across, even more so than the Sam Altmans of the world, across like 20 plus different fields. Like he can tell you about the net new machine learning techniques in TensorFlow. He can tell you about the, sort of new substrate materials that are being used in chips manufacturing, performance of solar panels, battery chemistries, et cetera. He is just nonstop. He has I think almost a whole army of people around him that like help read condensed papers for him. He does intellectual debates. He likes investing in these types of companies. And I remember just seeing him being like, oh my God, like this is just like another level. But then recognizing the way that he was just doing it was just like, you're not going to do this overnight. You need to just start absorbing information, start like, talking to experts, start reading papers, and you're going to feel clueless at the beginning, but you have to, be willing to do so. But it is possible to continue to learn throughout your entire life. You do not need to just stagnate at software alone. And so I took that first leap while working at Coastal Ventures, was like, okay, I love aerospace. It's a field that I've like always, wanted to work in, but have never truly directly worked in, sort of professionally. I'm just going to throw myself out there. I'm going to start reading all of the aerospace press releases. I'm going to start reading the aerospace S1s by the public companies. I'm going to start going to aerospace, basic conferences. I'm going to meet with aerospace founders because now I work at Coastal Ventures and they should hopefully be intrigued with, meeting with me. And those baby steps that I took and call it like the, sort of 2017 timeframe with, I think, the premonition that, hey, if you look at SpaceX's, basically cost to launch or mass to orbit, it's a perfect exponential curve. This will be very valuable 3-4 years down the line when I think this industry is going to be exploding. And lo and behold, that was obviously what ultimately led me to, having the, let's say, knowledge and competency to both start Varda and attract great talent to it, as well as, right now I would argue, I think I'm investing in some very interesting, sort of early stage aerospace companies because of that very broad industry knowledge that started off with like true basics, just reading, basically press releases.
What's interesting is most venture funds allow their analysts to kind of like go out and look for startups. They're up to date on information, and some of the VC firms I've worked with are not too close to the founders, and I think that's an edge that's missing in the space, which is why I actually like the Founders Fund approach of always talking to the founder and the partner. Moving more closely to the venture side, you spent 6 years in investing. What's probably one of the biggest pivot stories that you've seen, and maybe just like describe some things that you've learned that could be important for founders?
I'm not sure that, at least within my personal portfolio, I've had some, sort of massive success that was what I would call a genuine pivot. But in the history of Silicon Valley, the one that like immediately comes to mind that feels the most obvious is obviously Stuart Butterfield with Slack. Originally starting off as like a gaming studio, building this internal basically chat thing that obviously then ultimately ended up becoming Slack. That to me is like the true epitome of like some of the things that my companies have done have been what I would argue more like geographical market expansion or slight product feature releases and things like that. Versus I think Stuart having the conviction to like truly hard left pivot with like, the venture capital that he had raised, the team that he'd put together, and go from like gaming to corporate communications. Yep. That to me is a much, let's say, braver, pivot. Varda in some ways has gone through, let's say, pivots along the way in that when we first started the company, we did have a very, sort of strong initial belief that the, primary market was going to be around the manufacturing of fiber optic cables in low Earth orbit. That ended up not being the case as the company played out over the past 3 years, both the DoD market around hypersonic testing, partially because of the timeliness of China launching a hypersonic missile operationally for the first time in summer 2021. Hypersonics went from being an academic exercise to something that you needed to become operational, and then that giving us basically enough revenue and enough size to actually be able to tackle the much larger market of in-space manufacturing of pharmaceuticals. So, in some ways the, sort of core philosophy of Varda has stayed the same, but, sort of the core market segments has definitely, in some ways been a pretty serious pivot.
When you assess founders that are pitching you, do you have a framework in place? What do you look for?
I'd say there's sort of two things that, always, are standard, and then a lot more that is custom on the per company basis. The first is I always like to say, why is this founder sort of like the superhero of this story? Why is this, effectively, their life's work? And I'll give it a particular analogy that is kind of funny today because, I did this, I came up with this call 4 or 5 years ago, which is, take Elon Musk and Mark Zuckerberg, two phenomenal, sort of world-class founders that, clearly are very capable. If you put Mark Zuckerberg in charge of a rocket company, you're gonna have a bunch of, engineers that are drinking smoothies at 4 o'clock and screwing around and, move fast and break things does not work that well in, rocket land. I think they would probably, never end up, landing a rocket. Now, my joke used to be, if you put Elon Musk in front of in charge of a social media company, that's going to be an unmitigated disaster because he's going to be, hauled in front of Congress for shit that he's, saying on the social media platform. Obviously, now it's kind of funny because, he's obviously, done this and, probably is going to get hauled in front of Congress. But the point being that, I think that, there's no one prototypical best founder like that, right? I think it's a question of, why is this founder sort of best suited? Why is this their life's work for the very particular, mission, and vision that they're pursuing? The second that I would say is, I think it's just looking for some level of just, spark. And that spark can come from areas that aren't necessarily, sort of professional. One example, I definitely find myself very predisposed to investing in former, D1 athletes or professional athletes, where if you have the discipline to be able to manage a like top tier university workload while also what is, necessary to, maintain the physical fitness of a D1 athlete, that discipline translating into the, sort of startup land and leading to, phenomenal success, I think is extremely likely. And so it's finding something where like, has this person shown an ability to be called top 0.1%, even sometimes in an unrelated field. Like most recently, we have this unannounced investment where the founder CEO was basically previously like a very successful media and entertainment star. I won't go too specific on her background, otherwise it'll reveal who she was. But pivoted hard into basically going to Harvard Law to study space law, and then started an aerospace company. And obviously, it's a wildly different skill set. But in some ways, she clearly proved herself by releasing a platinum album and then getting her own TV show. That stuff almost certainly that spark that is there is going to apply into the sort of business world. So those are probably the two things that I look for. Everything else is a little bit more custom, but it's sort of like founder fit and then spark.
I think Founders Fund was pretty vocal back in 2020 about being in real life versus remote, which was very contrarian at the time. What's consensus today that you have in terms of some thoughts around maybe building a startup or things that most VCs think is consensus in terms of ideas?
Yeah, I think, and this one's like, let's say, mildly contrarian, but even in this world of, high interest rates, high cost of capital, venture markets are definitely deflated relative to, so 2021, I would still argue that I think if you look at the companies that are started, call it next year in 2024, the ones that are going to generate by far the most interesting returns over the course of the next decade are going to be CapEx intensive, integrated hardware, sort of software companies that impact like real problems in the real world, much more so than like, something that's just pure software GPT, layer that is helping, lawyers file paperwork, more quickly. I just think that if you, at the end of the day, a venture capitalist's job is to, aim at, long tail, outcomes.
Yep.
And if you look at the, sort of top 4 most valuable, companies on the NASDAQ, NVIDIA, Apple, Tesla, 3 out of those 4 very, deep in the, sort of hardware, land. And ultimately, that's what you should be aiming for as an investor, not sort of a middling outcome. And so I still think that, people have this like, false belief that, software has, zero marginal distribution, great gross margins. But what that actually means is that you actually have no moat. And because that your margins are actually totally fake, because in 2 or 3 years, Snowflake and Datadog are going to be, at each other's throats and ultimately, can only compete on price.
Let's talk about the 30 observations at 30 that you recently launched. I think it was yesterday.
Yesterday, yeah. I wrote it yesterday and I published it yesterday.
There are a couple points that really stood out to me. One was the learning piece that we talked about earlier, continuous learning. Talk a bit about the YC experience that you had of being able to mentor founders. Why did you do that, and why do you think that was important?
Yeah, in the moment, I felt like I just needed to, pay back a lot of the favors that, many mentors had done for me and former YC founders that had given me, a lot of mock YC interviews. And so it truly felt like pure charity work at the time. It definitely was, I definitely maybe took it to the extreme where I would do like 100 of these interviews over the course of like a week or two. And I would literally stack them back to back, basically 3 an hour, 20 minutes each. And I would do them for like 4 or 5 hours at a time.
Was after you started, after you went through YC, right?
Yeah, this is after I went through YC. So this was, summer 14 is when I went through, and I think I basically started literally like the, following batch. And so I would basically do like, 3 hours a day for, call it a week basically, and, nonstop doing this. And at the time, I was not a particularly, let's say, like competent founder or anything like that, right? It's not like my, company was off into the races or anything like that, but I did get into YC. So I felt like there was something that I had of value that I could, sort of send back as, sort of a contribution to, future founders. Now when I reflect back on it, I sort of have two, sort of major conclusions from that sort of willingness to, help people or being interested in it. One, it turns out that stuff was not charity. By helping a lot of those founders, there were many of those that ended up turning into future investments, colleagues, sort of that, if you pay it forward, it'll eventually come back around to you. Absolutely ended up being true. And then the second was, I probably should have read into it a little bit sooner that I enjoyed so much coaching and working with other founders that was likely, I should have read into that signal and been like, man, I really should make that my profession in addition to, building companies. And so obviously, a couple of years later, as I was debating, should I actually go into this VC thing full time, I reflected on that and I was like, I've actually kind of been doing I did, Rough Draft Ventures, which is, this basically like university venture capital fund. When I was at MIT, I would do all these mock YC interviews that I really loved. I loved helping, my friends basically chew on the particular problems they were working on. And so like, man, I've been loving doing this for quite some time. I tend to believe if you make your professional job the thing that you just love doing, you're much more likely to be top 0.1% in it because it's not going to feel like work, right? Me coming into Founders Fund today, even yesterday, I had nothing on my calendar. I could have just gone and screwed around all day. The thing that I want to do is I came into the office and I was like, I'm going to write up a little, essay that, is half advice to founders, half personal. And hopefully, people find it valuable. And that was like the thing that I wanted to do on my birthday.
There's a lesson that you put in, I think it was top 5 lessons, which everything in life compounds. And I feel like people forget about that. In the world of distractions, notifications, and, thousands of ideas, working on just one thing and focusing on one thing is lost. What did you learn from compounding, and why do you think all founders should be thinking about this?
Yeah, I mean, when I reflect back upon my, I've now been in Silicon Valley for, call it, 11, almost 12 years now. And when I think back on all of that time, I look at some of the friends that were just constantly hopping from trend to trend, and were never giving, basically the compound interest curve the time to actually get to the back half of the curve, right? They start going up, they would get frustrated with their progress, and they go to the next thing. What they don't recognize is those things that appear to be basically overnight successes are people that have let that curve, basically play out over the course of 10 years. And I think it impacts so many different, aspects of life. It's everything from literally individual, literal financial investments, right? Investing $25K into a company and letting it ride through all the way to IPO rather than, liquidating too early. I think it pays out, sort of professionally where you need to be willing to, like I, did in aerospace, somewhat swallowed my ego, was comfortable being embarrassed. I went to these aerospace, conferences without knowing a thing. And then rather than coming away from the conference being like, man, I'm overwhelmed, I don't know anybody here, that wasn't actually that productive because I didn't get that many meetings. Instead, it was a willingness to ignore all the distractions of, in 2017, crypto was a craze at the time. And it was being willing to just stay focused on the thing that nobody else was really paying attention to, but continuing to hammer it down and do it for years and years on end to allow that curve to basically continue to go upwards. And then I'd argue, I think the same thing is true in, sort of personal relationships. I think a lot of people are prone to sort of friend hopping or trying to optimize for who's going to be the friend that can really help me with my next step on the professional life, and take these very let's say surface level viewpoints of relationships versus I think I've done a decent job of cultivating a set of very close friends that have now been my sort of friends for over a decade now since coming out to Silicon Valley, and irrespective of what they're doing professionally, continuing to invest in those friend relationships. And then on the sort of personal side as well, I've now been dating my wife for on the order of 4 years now, 4.5, and I think in some ways the depth of that relationship has only grown over time. The amount of joy it provides me, stability, the just viewpoint from somebody that deeply, deeply understands me and how valuable that is when I'm considering things sort of professionally. I included in that essay an example where in the final moments of deciding whether or not to start Varda, I definitely had a little bit of confronting this existential dread of oh my God, things are working pretty well on the investing side. Why the hell am I taking this massive risk to go do this when it's so hard to get the investing thing to work well? So many people would be love to do that. I'm now doing the thing where am I not letting the compound curve ride enough by doing this? And her resounding feedback was Delian, you've lined up the perfect team. This is your life's work. Screw the anything else. You gotta go do this, right? And so imagine that I hadn't invested in that relationship and instead, I didn't have the pillow talk and instead panicked and then, bailed on that, sort of co-founding, relationship, and Varda wouldn't exist. And so I think there's just so many of these things that people just underinvest into, and the compound curve isn't just sitting there passively waiting for it to compound, right? I think that can be true in, let's say, the financial instruments, but on the sort of learning or the personal relationship side or professional relationships, it requires sort of you are the interest. You have to constantly allow it basically to compound by continuing to put in small amounts of effort over the course of years and years and years.
Well, Delian, thank you so much for your time.
Of course,
a lot's been learned with our talk today, and thank you so much for your time.
Thanks for having me.
Yep.